Hello, everyone. Welcome back to the Paramic Hour. My name is Alex, and we have Frank here today.
Hey everyone, this is Frank. Welcome back to Paramic Hour today. First of all, hope everyone is having a good Friday. And today, what are we going to talk about, Alex?
We're going to talk about home insurance, auto insurance, the changes that have been happening between it, the difference between what causes the rates to change. We're also going to talk about a little bit about the market right now with cars and housing and how that's been affected by the recent changes. Definitely some good stuff here. But before that, we're going to talk about a little bit of news like we always do.
Okay.
I'm going to go ahead and start off with just some stock market news. So this weekly change has been pretty good. The past week, the stock market has actually gone up, which is good. As an example, the Dow Jones has gone up 527 points in the past week, which is 1.53%. The S&P 500 has gone up 115 points, which is 2.6%. And the NASDAQ went up 597 points, which is 4.19%. And for cryptocurrency, recently there's been a lot of fear in the market. Cryptocurrency has taken a little bit of a dive. But recently, Bitcoin, it hit its recent bottom at 29,000 and it's recovered today, as of today, to 32,000. That's about a deficit of 10%. Okay. So Frank, what news do you have for us?
Okay, so let's start off with some money, all right? As you guys may have heard, Jonathan, who is not here today because he's busy with customers and appointments. So just Team Frank and Team Alex today, as you can see. But on the last live stream, the Vietnamese version on Monday, Jonathan did share some news about the child tax credit, and I think that's a topic that a lot of people need to know. For those who are parents, from now until the end of the year, you can, if you have any child under the age of 6, you have a chance to receive on a monthly basis of about $300 a month for the child tax credit. Now, if your child is over 6, between 7 and 16, the amount is reduced into $250 a month. So the way that it breaks down is that they pay you half the amount on a monthly basis, and then that at the end of the year, they're gonna pay you the other half in the form of a tax refund. So they pay you half, then the other half they pay you in a big portion at once. But choose to opt out of the monthly payments for this year, and you can choose to receive the whole full amount next year when you file your taxes. Okay. And about one more thing that you need to know is that if you have babies who are born this year, you can also go to on irs.gov, and there's a tool where you can apply for your child who were born this year to receive the child tax credit as well. If you don't want to wait until next year when you file taxes and get the money back, they allow you to file those kids as well. So that's one thing you want to keep in mind. And the second news that I have is that for health insurance, the deadline again is August 15th. We're pretty close to the end of July now, so we have about a month and a half to go. Well, less than a month. Yeah, I'm sorry.
A little bit less, yeah.
Less than a month. Okay, so if you haven't enrolled yet, just give the office a call. I can certainly assist you in that. If you already enrolled but you don't like your plan for some reason, like you think is too expensive, the cost is too much, or you just don't like the service, just give me a call and I'll see what I can do for you. But that's pretty much my news for today.
Thanks, Frank. So we're going to go ahead and get into the topic. Like I spoke about earlier, the market has been really interesting, fluctuating between the housing market and the car market. So I have some statistics that I'm going to read over for us and take a look at. So for cars itself, people are always wondering, is it a good time for me to sell a car? Is it a good time to buy a car? Well, did a little bit of research, and Edmunds data shows that the average trade-in for a vehicle has rose up to $2,920 in March 2021. The cars that retain the greatest value are trucks right now. Those are the greatest ones that retain value for trade-in. People will ask, will the car prices drop in 2022? It could be months before we see any significant drops back to maybe the normal levels. There's also research showing that 2.6 million new cars were sold in August, from August 2020 to March 2021. Okay, the data shows specific cars to buy new that would be good, closer to the value of last year. These would be cars such as like a Tesla Model 3, Toyota Tacoma, Ford Ranger, Jeep Gladiator, and a couple other vehicles, but mainly there's a lot of the trucks on the list and utility cars and everything like that. So another statistic here is that the U.S. Auto industry sold over a little bit more than 3.4 million cars in 2020. And yeah, that's a lot, you know. And if you were to ask this year, there's been a rise of about 17.9% vehicles sold this year, higher than last year. So if, like I said, if you're looking to sell a car, it's actually pretty decent to sell a car now. But honestly, when you're selling a car, you have to buy a car if you don't have a secondary car, right? But buying a car wouldn't be as easy too, because the market has gone up on that too. So you gotta really think about, you know, what's more valuable to you, what ideas you have for planning for the future, or maybe you know, your budgeting endeavors in those type of things. But yeah, that's about cars right now. So let's go ahead and talk about car insurance and how car insurance rates have changed and what may have affected the rates and such like that. So for you, Frank, what kind of coverages do you buy on your vehicle?
You know, I always want to play safe, Alex. So whenever I buy car insurance or even home insurance, right? I just want to get the full coverage.
Okay.
I just want to make sure that I'm safe on the road, that I'm protected. If when I hit someone, or maybe when I get hit by somebody else, like a hit and run or something worse, right? I want to make sure that I have an auto insurance company that's going to pay, that's going to compensate for my costs.
Okay.
So full coverage is the way to go for me.
So it sounds like you want to make sure that you're well protected. You have a company that has a high reputation,
Yes.
or a reputable company that has a history of paying decent claims. Therefore, if something were to happen, you would have peace of mind knowing that that your claim will most likely be taken care of.
Yes,
right?
yes, absolutely.
That's good.
So I don't mind paying more because you know you pay for what you get, right?
Yeah,
Because you know we work in this industry and we see a lot of customers, a lot of times they care about the premiums and the prices, and which makes sense because everyone is trying to save now and you know in this year, so it makes sense. But at the same time, please keep in mind that you know when you want to save, which means you have to, one, lower the coverage, or if you want to keep the same coverage but you want cheaper premiums, remember we don't control the premiums. We're here just an agency. We work with different carriers to help you guys find some savings. So we don't control the premiums. The one thing we can do for you is that we can get you different companies, and you know different companies, they have different reputation. So one thing you as a customer you can do is that maybe you can do your own due diligence research on the background of these companies, and you know maybe you find some company that you think is trustworthy and you know go with it.
Yeah, that sounds good. So Frank, just talking a little bit about insurance prices from you as a personal example. How's your insurance rates compared to your last renewal?
Well, let's start with when I first got auto insurance, shall we? Because I got my first auto insurance about when I was 20 years old, and I bought a 2007 PT Cruiser, which is like an old car, right?
Okay.
But did you know how much I had to pay monthly?
How much?
$300 just on that car, just on that car. So I didn't know why until I started working. In this industry, and I found out that the two factors that affected me the most was because one, I was under 25, and two, I was newly licensed.
Yes.
So those are the two factors that are going to affect you the most. So you know, if I ever have a kid, and you know when she turns or he turns 18 or 16 and wants to buy a car, I'm most likely gonna buy them like a used car, man, because I know the prices for auto insurance is gonna be crazy. But as I aged, right, and you know I have no tickets, no DUI, I don't drunk and drive, I don't text and drive,
Yeah.
I don't get caught, get pulled over. The moment that I turned 25, Alex, the premiums go down significantly.
Yes, correct.
Because now I think they consider me as a mature driver.
Yes.
That's one. And two is because they gave me a discount. I think it's called safety driving,
Yes.
which means I haven't had an accident during the time when I first started driving until the time that I renew my auto insurance.
Correct.
So that's the one thing that I have been paying attention to.
Remember, folks, insurance, insurance is a transfer of risk. So a transfer of risk, what does that mean? It means that the insurance company is going to specify the rates based off of the risk that they are taking in. So what I mean when I say that is that, like Frank was saying earlier, a newer driver, they haven't been on the road very long. Their experience in driving is not very good. So when the insurance company sees that, they take that as a higher risk. So when you are a higher risk, you're going to equal to higher premium.
Yes.
So always remember, it's a transfer of risk. They are betting on the odds that since this risk is higher, they will charge a higher premium. So like as Frank said earlier a few minutes ago, you kind of pay for what you get.
Yes.
And you always have to remember that. There will be a couple factors that we will speak about that can change, influence, or make a difference in the rating. So
Yes.
like I said, a transfer of risk, there could be many factors. As Frank said, age is a factor. Driving experience is a factor.
Yes.
The type of vehicle you're driving,
Yes,
you know. So if you see that if you have a small little sports car, it's going to be more expensive because one, the car is a sports car, is more likely to be driven faster. The materials on the sports car is used lighter than a utility truck or an SUV. So these things are all factors that we have to keep in mind of. Other factors will be the location, okay? So whether you're in a different states have different limits of liability. And what that means, if you don't understand that, is that the minimal amount of coverage that you need to buy to protect your vehicle in liability coverage, uninsured motorist coverage, they are different per state. So sometimes when you're calculating premiums, you have to think about the difference of how they rate it. And each state has a different risk assessment as well too. Texas is known for really bad driving, okay guys? I'm originally from California, as Frank
I'm from
knows,
New York.
and he's from New York.
And I thought California and New York were crazy. But
Yeah.
when you came to Texas, guess what happens, man?
I know, man. Frank and I, we go out sometimes to get some lunch. We haven't driven barely 5 minutes down Bel Air, and we see like traffic violations left and right.
Yeah.
People are turning without signaling. People are straddling lanes.
No offense to Bel Air drivers, but y'all crazy, man.
Yeah, we kind of get nervous and kind of get scared. I start bracing myself onto the handles on Frank's car like I'm on a roller coaster.
Yep, and I was just praying and driving, man. I pray and I drive.
So like we were saying, it's a transfer of risk, and you have to remember that.
Yes.
As an example, I came from California, and the rates for the minimum liability was less. It was like 30-15, so on. Here it's 30-60, you know, which is a lot more than it is in California. California. And like I said, I'm getting back to the word. It's about risk assessment. You know, the higher the risk, the higher the premium. So always keep that in mind. So let's go over some different types of coverages that auto insurance offers, and how do we use it as a customer, and what does it mean to us?
Yes, Alex, because I work in this industry, and I used to work on the PNC side, so auto home insurance. A lot of times customers have been asking me, okay, can you review my coverage to see what I have? And when I go over the list of coverage that I have, they start asking me questions like, okay, what is liability? What is underinsured? What is uninsured? What is collision? What is comprehensive? So can you give the audience kind of like a general overview of what those items are?
Of course. Okay, so liability. Liability is that when you get an accident and people get hurt, that's the amount. That's a dollar amount that will be put out to protect each person in the vehicle, or how many people in the vehicle are getting hurt. So when we say 30, 60, 25, 30 is the first number. That's 30,000. That's the minimum they'll cover for one person in a vehicle. Okay. 60 is the second number, 60,000. So if you had 2 people in the car, they will cover 30,000 per person. Okay. So now if you had 4 people in the car, they will split that 60,000 between 4. but no more than 30 for one person in the vehicle. So that's the 30 in the
Okay.
so that's the 30 in the front.
So
okay?
that's about $15,000 per person.
Yes.
Yeah.
So now you're going to ask me, oh, so what's the last one? Is this 25,000 property damage? So say if you were to hit something and you cause damage to it, your insurance would, or if during claims, would or if, remember, it's not always 100%. The risk assessment has to go through first before things are going to be paid out. So that last number, property damage, 25,000, would cover if you were to hit something, a vehicle or a property, and damage it, how much would it cover? So coming down to coverages, as Frank was saying earlier, there's many different levels of coverages, and for the customer themselves, you or I, when I'm a customer, we have to decide how much coverage we are willing to buy in order to protect ourselves.
Yes.
So that is something that you have to think about yourself, how much you're willing to buy in order to protect your situation, okay?
Okay.
So, go ahead, Frank.
I was gonna ask, now that you went over those details in coverage, a lot of times customers also ask me that, hey Frank, okay, thank you for explaining, but tell me, since I'm trying to save money right now, can I do like 1.5 coverage? Can I do like one-way insurance only?
Yeah.
And can you tell me the difference?
You know what's funny? In the Vietnamese community, something called 1.5 is a common thing.
Yep.
When I first started working as an agent, I called Progressive and I asked them, my customer wants 1.5 coverage. They told me what's 1.5, and I got stumped. I'm like, so I kind of had to explain to them 1.5 means that so 1.5, Frank, it means that you're gonna cover if you were to hit someone, or if they were to hit you, okay? So that's 1.5. That means that you're covering if in the situation that you hit someone, then there's going to be coverage there. Or if you get hit by someone else, there's going to be coverage from there.
Okay. Okay. So that was 1.5, you
Yeah.
said? Okay. What about one-way coverage? What is one-way coverage?
So one-way coverage sounds pretty straightforward. One-way coverage means that you're covering just the liability portion. Means that if you were to hit somebody, then there's going to be possibility of a claim payout there for you. So those are for people who just only want to worry that if they're going to hit another party, that they're not going to have to worry about paying out of pocket. Versus if someone hits them, then too bad, so sad, you fix your own car, or you just learn to drive a little bit better and be careful.
So if you hit someone, they only pay the other person, they don't pay you.
Exactly.
Okay. So what are comprehensive and collision deductibles are? Because a lot of times I see 500, 1,000, 2,000.
Okay, so yeah, I'll break that down. It's a great question, Frank, because a lot of these numbers can get confusing when you look over them. There's so many different numbers, but when you break them down little by little, it becomes more easy to understand. So the comprehensive coverage is under things when you are not driving the vehicle. So damages such as a hurricane comes, destroys your car. That is the comprehensive coverage. Or number two, say some guy's playing golf, he hits the ball, comes and hits your windshield, breaks your windshield. Now you got to repair, fix your windshield. That will be under your comprehensive.
I see.
Say that some guy was going to the supermarket and then he hit the shopping cart into your car. That'll be under your comprehensive as well too.
I see.
Okay, so remember, any damages where you're not self-inflicting it to your vehicle, that it's been inflicted to your vehicle while it's not being driven or while it's being stationary, not inflicted by you. That would be your comprehensive. Okay?
Is blood counted? Is blood counted?
Flood, yes,
Counted?
flood is counted under comprehensive.
Because
Good
we live
question,
in
Frank.
Texas. It's like we're in a storm season, and there's a possibilities that your cars might get flooded. So customers, they might want to know if they can claim their auto insurance under the comprehensive if they get flooded.
Yes.
Okay, so they can.
And then as the second one, you ask collision. So
Yes.
collision is going to stick with the property damages, because when you crash into something and you want to pay that collision damage, there's going to be a deductible comes out of your pocket.
Yes.
As Frank said earlier, sometimes you'll see 500, sometimes you'll see 1,000. So what that means is that hypothetically, let's get in a situation. I'm driving a car, I hit someone, I cause damage, and then I want to work on fix on the damages. So I would pay the collision portion of the deductible before the claims would be processed through.
Okay.
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 So as Frank was also saying earlier, how do I use insurance and structure it in a way where I still have coverages and I still have a way to protect myself, but how do I lower it? So as I said again, it's always about risk assessment. So say you can increase your deductible, which will therefore decrease your premium, but keep in mind when you change your deductible, say from 500 to 1,000, you're going to be paying more out of pocket when going through claims, but within your term of your policy, whether it's a 6 months or it's a 1 year, you will be paying less if you have a higher deductible. So that is up to you as a customer to assess your risk and your willingness of how you would like to structure your insurance.
Okay.
Okay. So I'm going to give another example. If you just want to buy insurance and you want it really cheap and affordable, then you can have a higher deductible. But keep in mind, when something happens, that out-of-pocket money is going to be really high.
Yes.
Okay. So some people will strategize, I don't even intend to use my comp and collision. If something happens, I'm just going to eat it and I'm just going to suck it up and I'm going to move on with my life. Then you might want to have a higher deductible, but in case something really happens, you still have it there in case you need to use it. Okay.
Okay. Yeah, just for another example, this happened to me once. When you're driving, there's a rock that hit your glass, and now you have a crack, and now you have a chance of a broken window glass, and you go to the auto collision or a repair shop, and you need to assess the cost of paying to replace the glass yourself, or should you claim the insurance? Because a lot of times the cost to replace the glass is less than the deductible that you have to pay if you claim insurance, so it's not worth it, right? Plus, if you claim it, the one thing that I noticed in Texas is that, Alex, no matter whose fault it is, whenever you get into an accident, it doesn't matter if it's your fault. Up on your renewal, the rate's gonna go up. You know why? Because they see that you had a claim, even though it's stated as not at fault. So a lot of customers, they have been asking, hey, it's not my fault. I was driving, I was doing my due diligence, I was driving by the law, and somebody didn't follow the rules and the law, and they hit me. So it's not my fault. Why am I paying more for something that I did not do? That's the one thing that we try to explain to customer, maybe on a daily basis, even that it doesn't matter what I mean. I know it's weird, but in Texas it doesn't matter whose fault it is. They just they see a claim, okay, go up.
Well, Frank, like I said, I keep saying this the whole live stream so far. I'm gonna get back to saying again, it's about risk assessment. So coming from the insurance company's shoes, they the value and the premiums are dictated by the risk level. So if you are causing a risk of an accident, or were in a situation where you are part of the risk, that is a risk assessment where it's going to increase the premiums regardlessly. Okay. So another thing too, just while we're still on the topic, comprehensive claims, you got to be careful with them too. Because if you have too many comp claims, some of the insurance companies will not accept you. Some of them, it's about up to 5 comp claims. So be careful when you're doing comp claims just for a piece of glass. Like Frank said earlier, you gotta dictate it yourself. Whether if I'm gonna pay his deductible, is it really worth the squeeze? And number two, it may be worth the squeeze, but it's gonna go on your record and it's gonna go under a comprehensive claim, and claims increase your premiums. And
exactly.
In the state of Texas, it's not going to fall off in 5 years. So you got to take that with a grain of salt and calculate, is it worth it for me to claim my broken glass and have it on my record for 5 years? Okay.
Okay. So now that we talked about that, Alex, what if you as a customer, what are some ways that you can find some savings when it comes to auto insurance?
Okay, so let's give another hypothetical situation, because a lot of times people understand more when you scenarize things rather than you just throw out numbers. So say we have a family of 3, we have 3 vehicles, okay? Say 2 of the vehicles are kind of older, right? So you got to think in your head, do I really need full coverage on these older vehicles? What if the car's only worth like 500? What if it's a piece of junk? If it's like your son's a brand new driver, like Frank said, I'm gonna buy him an old car, right? And what if it's like a $500 to $600 car? Why would you need full coverage for that when the deductible is about the value of the car or whatnot? So in that situation, what you can do is that you can just buy the liability coverage on that vehicle in case that vehicle gets into an accident with another vehicle of higher value, then you can cover those damages, okay?
Okay.
And so like I said, as an example, if you have two cars that are older, I would recommend possibly getting just liability coverage on those. And if you have a newer car, you can get your full coverage on that. So the insurance is not going to force you to buy the same coverages all across the board. You can kind of move around certain things for each vehicle, but that's very dependent on each company. But majority of the time, you don't have to buy full coverage for all vehicles. So you can kind of play smartly and strategize. As I said, risk assessment again. Is this risk worth it for me? And if not, then maybe I should lower the coverage on the other vehicle. Early quoting. A lot of the companies, they have something called the early bird discount or early quoting discount or advanced quoting discount. And what that means is if you quote 7 days ahead of the effective date of the day of binding, binding means the day that you take ownership of the policy and paying your first premium on that.
The effective date.
Yeah, the effective date. So always remember, guys, whether you're going to us or you're going to your current agents or you're shopping around, do give the agents some time, at least, I would say at least a little bit over the first 7 days, just so we have enough time to assess your situation, understand your needs, and then work with our carriers to find what is the best and what is the best value and best suitability for you, because each company has their own different risk assessment. As I keep saying, they may rate differently per company because of what they're willing to take in and what they're willing not to take in. So definitely quote earlier. Frank also mentioned that you can get a discount if you're a homeowner.
Yes.
So insurance companies like to know that you're a financially responsible person. So if you happen to own a home, you probably are more likely to be responsible, because owning a home is not an easy task and it's not a normal task for just everybody out there. So if they see that you have a home, that shows that you have some kind of financial responsibility, and therefore you can actually get a discount as a homeowner discount.
Okay. So what about let's see, I also heard something about if you go with a company and you buy both home and auto, since you mentioned that, if you have a home, you're more likely to be responsible financially. What if you have a home and now you have some cars and you want to combo, like kind of combine everything together into one carrier? Would you get more discounts if you do so?
Yes. So a lot of the times the companies will give you a homeowner discount package. So if some of the carriers that they do offer home and auto combo within their company, and if you do that, they usually give you a pretty good percentage, maybe 10-15%. Roughly, it's a give or take number, but it's a pretty good discount. Another way is that if you're working with an agent and then in the agency, some of the home insurance companies, they will have a discount if the prospect is buying home and auto. There is a selection that you can pick as an agent for your customer within agency. It's called an agency discount, that if you're calling home and auto, even if it's a separate company, like say it's company A and then company B, and then both of them don't, one sells auto, the other sells home. The company B that sells home, they may have a discount if the prospect is buying auto insurance within the same agency that those carriers are selling. So that's something that keep in mind, that if you do have a home, don't be scared to let your agents or let us know that you want us to check that out for you and quote that for you, because we might actually be able to find you a decent savings. And little savings here and there, they do add up, and that's something that we're always trying to help everybody with, and that's what everybody's always trying to find. So yeah, definitely.
Okay, thank you, Alex, for the information. And I think that's pretty much all the information that maybe for now you need to know about auto insurance and how to find some savings, as well as how to differentiate different types of coverages. Like Alex mentioned, full coverage, 1.5, one-way coverage, now you know what you need, right? So you need to go home. Maybe if you're looking for auto insurance or even home insurance, give us a call and just let us know what type of vehicle that you have, how many drivers, and maybe from there we can do our own investigation and give you the result. But you as a client or as a prospect need to assess the risks yourself to see what type of policy gonna suit you best, because we cannot tell you that. You have to do your research and assess yourself. But as long as you know the basics of auto insurance, you should be okay, right?
Yeah. Just remember, whereas what we as agents, we can only help advise and help educate you on what the meanings of insurance is, what it means to you, how it works.
Yes.
But you as a customer and a prospect, you have to decide yourself what risk you're willing to take and what is important to you. But we're, like we said, we're always here to assist you in understanding that, to therefore for you to make the best decision for yourself.
Awesome. Thank you, Alex. Since Alex, we did talk about home insurance in the last topic, and we did bring it in a little bit right when we talk about auto insurance. So let's move on from auto insurance to home insurance, because they're in a way kind of related to each other. So I want to talk about home insurance because we're in a storm season, and especially the storm back in February and March.
Ooh,
yeah, and there were like crazy claims. I want to get kind of like an insight of the home market or home insurance at the moment. So can you give us like what your thoughts on the home insurance market right now?
Yeah, of course.
How does it look like right now?
Well, ever since I've been an agent writing for auto and home with Paramic, I've noticed that the rates each year has gone up, an average 8 to 10%, maybe within 6 months to 8 month renewals on specific items. But home, I've been seeing about 10% a year. That goes with flood too. But like I said earlier, it's about risk assessment. With the insurance companies, when they start paying out more claims, more monies are coming out of their pocket, they have to charge more premiums to the customers. So please don't think that it's us agents controlling the prices, trying to jack everything up because we with our blessed heart, we really wish we could control the premiums and make it cheap for everybody and
everything
have it fair
is
for everybody.
Right? The $1 insurance agency.
But yeah, we wish we could control it and give you guys great deals. But we're just trying our best to find what's the best price within the industry for you. But yeah, I've been seeing an increase about 10% per year. There's a couple factors like that. Like I said earlier, when there's a lot of claims being paid out, they're going to jack up the prices. When there's storm seasons coming, prices will increase. Sometimes insurance companies won't even sell insurance because, like I said, a risk assessment, they see, oh man, this storm's coming. I don't want to we're not opening our doors to any new policies until the storm goes away. Okay, so that's something that we have to worry about too.
Okay.
Different factors, as you said, about insurance. State by state's different too.
Of course.
Let's take an example about California. There we go. Versus Texas. So in California, everybody, what is everyone scared of?
Earthquake.
Yes. In Texas, where is everyone scared of?
Flood and storm.
Okay. So with earthquake insurance and flood and hail damage, they're different coverages and they're in different states. So the coverages are different, the premiums are different.
Yes.
The amount that earthquakes happen versus the amount that windstorm happens is different. So they're they're not apples to apples, they're apple to oranges. So we always got to keep in mind that everywhere is different, and wherever you are, you just have to accept that that's what it is. And unfortunately, that's just how life is,
So in a way, the assessment of risks are also different, and they vary by state to state, right?
Yes.
Because a lot of times, we got some customers asking that, hey, how come the prices for home in Texas are a lot cheaper than the prices in California? But for some reason, the home insurance is vice versa, more expensive compared to California. So to them it don't make sense. But like Alex just said, home insurance, they vary from state to state, right? So like in Florida, in California, they are afraid of earthquakes. In Texas, we're afraid of flood and windstorm and hail. So there is that difference in the risk assessment. So you need to take that in, and you need to know that, hey, if you move to a different state, you should expect that, price is going to be different. It might be higher depending on where you're going. So please keep in mind that we don't control the prices. We're on your side. We're trying to help you as best as we can. So, just something that you should think about when you go buy home and auto insurance.
So let's talk about home insurance and price dictation and how to get maybe how to control the premium a little bit more.
Yeah.
Because that's always something people are concerned about. Oh, my renewal is too expensive. I want to get a better price. What can I do to make it more affordable? Okay. So insurance has many different coverages. It has starting from coverage A, which is the dwelling.
Yes.
That is the value the insurance company has assessed your property that they need in order to build it from ground up. Okay, it's not the value of your property on the Texas appraisal. Okay, it's very different. So just because your house is worth X amount in the market right now doesn't mean the insurance company is going to assess it at that value, because they have their own team to build and have their own cost for materials to build your properties, so it may be different. Also, another factor, Frank, I'm pretty sure you know this one, insurance companies don't cover what of the house versus what the value of the whole property is worth.
Let's see. I remember the ground, the land.
Yes.
The land.
Yes. So the land that your house is built on has value too, but the insurance company doesn't cover that. They cover the dwelling. That's why it's called dwelling. Okay, so keep that in mind. I just don't want people to get confused thinking that insurance companies don't respect the value of your property. They do respect it, but they are only willing to cover the dwelling. Okay.
So, tell me, Alex. So when you buy a home, right? Do the value of the land included in the price of the home as well? Maybe that's why a lot of times customers ask us that, hey, I bought this home for X amount, but why is my home insurance for dwelling A, they only have this specified amount less than what I pay for? So maybe is that one of the reasons why?
That's exactly the reason why. That's primarily the reason why, because they don't cover the land that's being built upon the dwelling itself. Okay.
Okay.
So
go ahead.
Go ahead, Frank. Oh, I was just going to go to coverage B.
Go ahead.
So coverage B is other structures. Do you know what other structures entails?
Other structures, from what I'm understanding, right? I'm kind of noob in home insurance, but
That's
from
okay.
what
I'll fill in. I'll fill in for you.
From what I've been taught by Alex and Jonathan is that other structures are the things around your house, like the fences and the sheds, maybe detached garage.
Correct.
Yes. So those are the things that are considered other structures, as long as they are on your property, but they're not attached to the house itself, right?
Correct.
Okay.
And usually the other structures is about 10% of the dwelling. So if your dwelling is, say, like 400,000, then it's going to be 40,000 for other structures base. Okay.
Okay.
We'll move down to coverage C. Coverage C is personal property. Very straightforward. It is the personal property inside of your house. All of your furniture, TV, rugs, couches, chairs. Personal property in the house. That is what coverage C is. Okay.
Okay.
The next one is coverage D and E. That is fair rental value or loss of use.
Okay.
So what this means is that if you're the homeowner and say hypothetically something happened to your house, windstorm came in, smashed up your roof, now you got water leaking in your house and in your bedroom, it's building mold in your house, you can't even live in the room in the house anymore, and now you have to go rent a hotel. Well, the loss of use will supplement the time that you lost and now you have to spend to go live elsewhere during that time of distress for you. Okay, so during the time that your house is being repaired back to its living state where you can live in it again, the loss of use will cover up to that X dollar amount. So what you do is that you go ahead and provide receipts to insurance company for them to go ahead and reimburse you with that.
Okay.
Now, if you are a home investor, and if you're a home investor and say this is your investment property, that coverage, what it does for you is that, say Frank is renting from my house, right? And then now something happened to my house, same situation. Windstorm came in, wrecked my house. Now Frank's like, I can't live here, Alex. I'm going somewhere else. Well, guess what happens now? Frank's not paying me rent. So where am I going to get my money? So the loss of use / fair rental value will be paying you the difference of saying Frank not paying me for rent now, that's going to be supplemented to me. So that's a great coverage that you need to keep in mind, and something that you don't need, but something that you may want, okay? And then you have two other ones, liability and you have medical, okay? So liability is in case of the situation where somebody gets hurt on your property and they want to sue you, then you can have that liability to cover you. Another way it works too is that, say that I'm having a barbecue, Frank's my neighbor, you know, I'm having a barbecue, having a good time, and then I go to use a restroom, I totally forget that the fire's on high. It completely just, there's like a wind comes and blows the fire over, and it just burns down Frank's house.
Oh man.
You know, and then I have 500K liability coverage. Frank's house is about 400K. Then the liability coverage will cover the damage that occurred from me going to Frank's house. Okay, so keep in mind, liability is damages from your property going to someone else, or damages from that people take on your property. So say for the last example, you got some guy cutting your plants, he's just trimming. He's trimming, you know, and then he gets hurt, and now he's like, oh, I want to sue you. You know, your house was unsafe. There was some rocks there that were unstable, and you know, I feel that I was threatened on your property. Now I want to sue you. Well, the liability coverage is going to protect you. So keep in mind, you can buy liability coverage from about 100K to 500K. Some insurance company will let you buy more. That's another thing that you, as an insured, have to decide yourself how much coverage you want to buy.
Yes.
The last one is medical. Medical is same thing as liability, except it goes through quicker. Liability has to go through claims. So medical will take care of medical damages that someone has occurred on your property. Okay.
Okay. All right. So thank you for the information, Alex. So what I want to know now is that what are some other tips that we can do to kind of save on home insurance? Like what do we need to know? I think about roof age, what is RCV, what is ACV, and then is there like a waiting period for flood insurance, just in case I want to buy flood insurance because we live in Texas?
Yeah.
So can you kind of go over those?
Okay, so let's get back to the main coverages from A all the way down. These are coverages that can be moved around more or less within percentages. You cannot control the exact dollar amount. So say, for example, if you don't need that much coverage B for other structures, you might want to drop it down to maybe 5K. If you don't feel like you need 300K or 500K liability, maybe drop it to 100K. If you don't feel like fair rental value or loss of use is important to you, say that you got a family with plenty of houses, or you got a second home, then you might not need that because you can just go to your second home or live at your family's house. So these are coverages that you can either reduce down or remove depending on each company to reduce your overall premium, okay? As you said earlier, another thing that can dictate the pricing of your premium is the condition of your roof. Some companies, if you have a newer roof, the insurance may be cheaper. Also, if your roof is over about 15 years old, the company is going to assess that risk as something that they don't want to take 100% liability for it. So what they'll do is they'll put something called ACV. That means actual cash value. Frank and I have made videos about this in the past, but we'll go ahead and talk about it again. Actual cash value means that they're going to calculate the value of the roof minus the appreciation. So if your roof is 15 years old, they're going to calculate the value minus 15, and then when going through claims, you pay the deductible, and then you pay the difference for your roof. Okay, so keep in mind, condition of roof is very important. Always disclose the true roof age of your property when working with your agent or working with us, because even if you don't, the inspectors are going to come out and inspect the property. They may climb on the roof, they may fly a drone, they will check for liftings of your lifting or buckling of your shingles on your roof. They will check for granulation loss. These things are factors that will affect your type of insurance or your premium, could possibly affect your premium. So keep that in mind.
Okay. Okay. Let's see what else we have in the. Well, before we do that, let's move on to see if anyone is watching right now. Maybe if you guys have any questions about what you have on your home and auto insurance that you want to go over, just leave a comment or maybe call the office and we can help you, right? We do this video just to inform the audience of what they're currently having. So, because I think the people should know what they buy to protect themselves and also protect the property. So, if you have any questions about what you're having right now, just drop a comment. We do our best to answer you.
Yeah, we know insurance and numbers can be really intimidating and confusing, but us as agents here, we're here to support you and help you understand what each coverage is, what the meaning is, and how it brings value to you. Because when you understand what you're buying, it makes you feel good about yourself. So don't feel intimidated to ask, because we can help you understand each coverage and help you possibly move around certain things so it becomes a more realistic insurance that you can buy that can bring the most value to you.
Okay. What are some other ways that I can save money, Alex? I hear about, if I have some toys, like if I have like a classic car or a motorcycle or even a boat, and if I buy insurance for those vehicles, would I also get discount on my home insurance?
You can get discounts on those things. So those are other strategies as well too. So as Frank said, if you have these type of things, and some insurance companies will combo these things as discounts. So don't be afraid to let us know what type of toys or little vehicles of investments that you do have, because it could possibly help you get some more savings. So always share and disclose what you have, because like we said, us as agents, we're just here to support and help you work with the carriers to find what's best suitable for you.
Okay. So now that we talk about home and auto, I also want to spend a couple more minutes to talk about one other thing, is that health insurance. Because why is it related? Because if something happens and some people sue you because you hit a car or somebody get hurt on your property, the home and auto insurance, they're gonna pay for that. But what if they don't pay enough to cover for the medical bills? What if you're the person who gets hurt?
That's a good point, Frank.
Yeah, so I think it makes sense that you should have a health insurance just for yourself besides the home and auto, because you need to make sure that you're 100% protected all the way, right? So just in case this policy doesn't pay enough, you have the plan B to pay for the rest, to kind of help cost sharing.
Yes.
So that's why I wanted to talk about health insurance.
And I had another one, Frank. So since we're talking about covering yourself and protecting yourself there, now we have a lot of assets, right? We own cars, we own homes, but sometimes these things aren't free, or sometimes we don't have the money and the luxury to pay them all off. So sometimes we have loans on the cars.
Yes.
We have mortgages on the homes. So I wanted to ask you, since you've been doing really good with the whole life insurance and health insurance stuff, how can we use life insurance to protect our physical assets?
Okay, so like Alex said, if you just bought a home and you have like a mortgage, or if you just bought a car and now you're making monthly payments, you want to make sure that all those debts that you're having right now is paid off if something would happen to you tomorrow or the next day, because we don't know what tomorrow is going to happen, right? So if you have family members, you have a wife, children, or parents, and you don't want to. You don't want them to take over the burden that you leave behind. No. If something happens to you, so I would suggest that you get a life insurance just to protect those assets, just enough for your family members to pay for those assets if something would have happened to you. So I think it makes sense when you buy auto insurance, home insurance, health insurance. Those are the things that help protecting you when you're alive.
Currently,
but
yes.
You can still protect your assets even when for some reason or some events you may pass away, knock on wood. But you want to protect those assets from point A to point B. Even when you pass away, you still want to make sure, hey, my wife, my spouse, my dad or my mom, they should have enough money to pay off those debts. At the same time, they might have some leftovers to spend to pay for the bills that that can concur. So life insurance for me, now that I see the power of it, I would strongly recommend everyone you should at least have a life insurance policy in place, just to protect not yourself but others as well.
Perfect. And as we talked about, to sum everything up, you don't always have to buy the maximum coverages for everything. Like as we explained earlier, we can help you understand what you need and what you don't need, and then you can choose between there. But say, for example, you had an X amount of savings on your auto insurance because you're not buying everything that you definitely need, that you don't need. for home insurance. You know, you kind of chip down some coverages here, don't buy some stuff here and there. Now you're getting some savings there.
Yeah.
You know, before health insurance was more expensive. All the new stuff is happening. It's a lot cheaper now. So now that you have a little bit more savings, how about instead of taking that savings and using that to go buy personal stuff, now you actually have some of the savings where you can actually buy additional coverage to protect yourself in future endeavors in case of situations like Frank said. If you pass away and you have a loan or a mortgage on the home, well, who's it going to go to? It's going to go to your family. So if you're able to get a little bit of savings here and there, maybe, you know, don't drink coffee every day, maybe, you know, maybe make your own coffee at night. Don't go to Starbucks and pay $4 for it. You're overall going to save a little bit of there, and that will allow you to invest into the life insurance or another protection vehicle, and overall to protect yourself in a holistic situation. So
I read an article about the cost of life insurance, Alex, and just to bring it to perspective,
yeah,
if you buy a term, right, the cost of premium, if you break it down to daily cost, is actually less than when you buy a cup of coffee at Starbucks.
yeah,
I think
I agree.
It's like $5 or $6 a day,
yeah,
and you times that by the month, and that's your premium. Now, like Alex said, if you can, you know, don't drink a cup of Starbucks for a day, you can totally afford it. It's really affordable, and at the same time, it offers a high benefit. So yeah, protect your assets, but at the same time, protect yourself and protect those who you love as well. Those are the most important factors.
Well, everybody, I think that this is all the information and knowledge that we want to give to you guys and share to you guys today. I know some of this stuff could be a lot or could be overwhelming if it's the first time you've heard about it. But hey, you know, we're here to help you guys. We're here to help everybody understand what these things are, how to understand risk assessment, how to transfer that into protecting yourself, and how to understand how to dictate your own rates by moving around certain things, by not buying things that you don't need, or maybe supplementing things that you feel like it's not worth it to you, and having, you know, a little bit better control of what you're doing with your insurance and better understanding that.
Yes.
So Frank and I just want to say thank you everybody for joining us. You know, we love doing these live streams for you guys. You know, we love sharing information. We're in this industry because we like helping people, and you know, it feels really good helping people.
Yes.
So please, if you guys have questions, let us know. Our channel will only grow if you guys will share this to your friends and families. So if you have loved ones that you feel that would be of help with this information, please share it to them. If you have friends that you feel like they would appreciate it too, do let them know. We're here to help, and we want to continue to help you guys, but the only way we can get more exposure is by you guys helping us. So definitely help us by following us on Facebook, you know, following us on YouTube, click the bell. You know, the bell will help you get alerts when we release videos. Check out our old videos. Frank and I and Jonathan, we have a lot of different videos from English to Vietnamese, from different perspectives on the same topics. So some people are more, they take in information better from different types of personalities. That's why there's Frank, there's John, and there's Alex, because we all have our own ways of seeing and saying things. But in the end, we all work together as a team, you know, to bring the same value together to everyone else. So I hope that you guys appreciate what we're doing, because we greatly appreciate you guys and your business and your continued business, and the viewers that are watching and spectating. We always appreciate you guys there. And yeah, you have anything else to say, Frank?
I just want to say thank you to everyone who has joined the live stream, not just today, but the previous ones as well. And thank you for your support. And I look forward to do business with you guys maybe one day. You know, if you keep watching enough, maybe you learn something, and maybe someday you can give us a call, and we can maybe actually, for me, Alex, we're here not just to help with the financial planning. We're here, like you said, to change people's lives.
Yeah.
And that's our mission, and that's what we want to do. So don't be afraid to give us a call, and you know, just let us know what you need, and you know, we will do our best to help you out.
All right, thanks everyone. Thanks for joining the Paramic Hour. Until next time, and we'll see you guys later. Take care.